Hello, everyone, and a very warm welcome to today's cryptocurrencies update for Wednesday, September the 18th, 2024. And yes, we have refreshed the opening slide or page or view or whatever you want to call it, because we had some computer issues, and that is why today's update is later than usual. We had to do an update and then some BIOS stuff happened, but we're back on track, and I thought I'll take the opportunity to refresh some of our slides to make them look even nicer. That doesn't make price action any better because, B is for boring. Currently, things are very boring in crypto world. Now, I don't know if boring is good, but actually B today is for Binance Coin, Bitcoin, IBIT, and BITO, whatever you want to call it. Those are the four we're going to cover because those, I think, are the four that still looks the best. The rest are still, in my humble opinion, tentatively bullish, and I don't even want to touch Ethereum at the moment. I don't see anything yet that makes me excited. Same with the other ones that we normally cover. And that doesn't mean there is no upside left. I just don't see it just yet. Of course, we have the Federal Reserve's rate decision behind us, lowering interest rates by 0.5 percentage point, all nice and dandy, but the cryptos barely budged. So what does that mean? We keep on tracking the Elliott wave with a preferred wave count and an alternate wave count. And we can never be 100% correct because we're dealing with a complex system, and complex systems can not be continuously predicted accurately and correctly. There is always variability because we have millions of variables going into it. Always adhere to your trading rules. You can use Jesse Livermore's as an example. He did pretty well. I think the best one is never average down on your losses. And of course, always have stop losses in place, even if it means you're going to get whipsawed. You're only going to get whipsawed after the fact. Okay, then it is always frustrating, but you can always catch the next bus because you don't want to end up like person B, who in the end has much less than person A because he has no stop losses. Many ways for you to get exposed to different markets. I've hammered on the gold and miners. Yeah, they didn't do so great today, but they've done wonderful so far this year, and especially the last half year, where cryptos are down 20% and gold and miners are up 20%. That's a 40% difference. If you'd put in 10,000 in gold, you'd be up $2,000. If you'd put it in Bitcoin, you'd be down $2,000. You would have $4,000 more. Not a bad deal. So always be vigilant, always look at what's moving in your direction and what's not moving, and shovel that money around. That's how rich people do it. So that said, let's go straight to the charts. But actually, before we get there, remember yesterday we wrote with price back above the 50-day simple moving average while holding the 10 and the 20-day simple moving average, as well as being back above the Ichimoku cloud. I think Ichimoku cloud, iCloud, is now as relevant as it is in current information technology age. So I love it what Mr. Ichimoku had invented way back. And of course, we're back above last Friday's high. Only intraday, not on a closing basis yet. And I prefer closing bases, which are based on London time, midnight. So Bitcoin is most likely in that blue wave C of the orange wave A of the gray wave 3. I know that is a mouthful, but you know the chart, and I'm going to share it with you pretty soon. And of course, contingent on holding above the warning levels. All right, see the BTC1 chart. And of course, the alternative remains that we only got a B wave up, and that still remains the alternative. But this is still the case, and the 50-day and Ichimoku cloud continue to hold even today. Although, of course, the price action was pretty flat. We had a little bit of a move down before the Fed meeting. Then we had a move below it. And currently we're up like 1% or something. Not much. Okay. But up is up. So this remains the preferred wave count. Binance Coin can still have this 1, 2, 3, 4, 5 setup. I had a little bit too bigger numbers, I think, on Monday in the chart or whenever I shared it previously with you. So as long as we hold above the warning levels for the bulls, which we broke the first one on Monday, but we held the second one on Monday and Tuesday and today as well. Remember, these levels are there for a reason. They are based on previous price levels, Fibonacci retraces. As you can see here, this is the gray line, and it was, of course, support here, and it was support here. It was resistance here. It was support, support, support. These levels are key. Okay, they're not just sucked out of our beautiful thumb. No, they are there for a reason. And of course, we're holding above the third and the fourth. So as long as we hold above these, we can move higher. And then we'll be looking for about 775 for a 3, ideally. A 4 back to about 665, ideally. And then a 5 back up to about, I would say, 800, almost 900. Okay, that still matches with our 850 plus minus 50 upside target for this move. As you can see, we're holding above the clouds, the 50-day, the 10, and the 20, but we're still below the 200-day. We need to clear the 200-day, 565 currently, to start to gain traction with this wave count, because still a potential at this point. If we break above this potential wave 1, it's potential because it's still question mark, then I'm fully on board with this wave 3. All right, so let's look at Bitcoin. What is Bitcoin doing? It is trying to rally. And as you can see, we are holding the first warning level, which I have erased now. The first warning level is at the 50-day simple moving average, which is also pretty much at today's low. Today's low was 59,185, and the 50-day moving average is 59,250. So off by $65 on almost 60,000 is very accurate. We're still above the Ichimoku cloud, so this is good. And now we need to break back above at least the 200-day moving average, and especially 65,000, the potential gray wave 1. I should actually mark that with a question mark, just as I did for, of course, Binance Coin, because we don't know yet with certainty if that is indeed gray wave 1. And why is that? Because we still have the potential for that B wave top. And then we are looking for higher prices for a C wave. Okay. C wave there. And we don't know yet how high that C wave will go. Will it be equal to A? Will it be extended to A? I don't know. So let's just say we're going to get a CSA, which targets somewhere a little bit over 65,000, as you can see. Okay, 65,630. It wouldn't surprise me if that is A for a wave of the third wave. We get a B, and then we get another C. So very subdividing, overlapping price action, right? That is kind of the whole idea of a diagonal. Okay, so then we get, of course, B. So we get something like this, right? Like A. We'll get B, something like this. We'll get C, something like this. And we don't know yet either how much these ones are. These are just potentials. So you can say, well, this is just, waving your hand. Well, it kind of is, unfortunately. And then we get, of course, 4. And then, of course, we'll get our wave 5 all the way up to the target zone. So the target zones remain the same. We don't know yet at all which will be hit and which will be exceeded. To be determined. What we do know is, as long as we hold above today's low, which is the 50-day simple moving average, we can move higher. And of course, a breakout above today's high, which is equal to yesterday's high at about 61,340, would be another good sign for the bulls. Okay, then again, I'll be looking into the 65,000 plus or minus 1,000 range for this blue C wave. Let me color coordinate that with you as well, so that we get this right. So that is the A, then a steep B, and then again a C wave there, of course. So it's going to be pretty complex overlapping. It's kind of like hold your nose type of price action. So the alternative still remains that today's top, which equals yesterday's top, is a B wave. But again, we need to break below those warning levels, especially 55,500 to really signal that is the case, right? So these are, of course, also still question marks, right? Is this A wave? We don't know yet. Is this a B wave? We don't know yet. And again, the problem with a ending diagonal as stated several times before to my premium members and now to those that are listening later on, is that diagonals, especially ending diagonals, are 3, 3, 3, 3, 3 price actions. So everything is a 3: wave 1, wave 2, wave 3, wave 4, wave 5. So the initial stage, the 1, the 2, and the initial part of wave 3 are indistinguishable from a corrective pattern, because corrections are also always 3s. So we won't know with certainty that this is an ending diagonal until, unfortunately, much further down the line. This is why we have to keep both options available. And this is not one of those stupid remarks where people say, so you're saying it can go up and down. Yes, that is what I'm saying, but it is always contingent on holding above or below certain price levels. And unfortunately, we simply cannot distinguish between the two. So at this stage, yes, that is the answer, with the preference for higher prices because of where we are in relationship to important parameters, which are objective. These are objective parameters: Ichimoku cloud, simple moving averages, lows, highs, resistance, support levels. Those are objective. And as long as we hold above those, we must allow for price to discover itself to a higher level. And also remember, Bitcoin is now starting to mature more and more. So some of these price sections will not be as steep and comparable to what we had, for example, 10 years ago. Okay, that was really steep price discovery. And now as Bitcoin is maturing, that price discovery will, of course, move away. It's still there, but not as rapid as it used to be. So we can allow for this. Let's see where we are tomorrow. Alternative remains here. We have a very complex B wave. Perfectly fine too. But again, we need to see these lower prices. And currently, we're not seeing it. Currently, Bitcoin is holding above critical levels, which we have been able to raise, which is also bullish. And as you can see, we're starting to attack the second warning level for the bears. Okay, so it's still boring, but with a positive slant towards higher prices. Moving on to IBIT. This is the wave count I'm tracking, an ABC for an irregular expanded flat wave 2. And here are the quadrants for where can we normally expect a wave 2 to bottom. So second waves can either retrace 99.9% of the prior first wave or 0.1%. That's all a second wave can do. Anything more or less, it's not a second wave. Now, normally, mostly, often, whatever you want to call it, second waves retrace 50 to 62% of the A wave. However, it can also retrace 38 to 62%, a little bit bigger target zone, or between 23 and 76.4%, or between 10 and 90%. So this is pretty much what you're then seeing, a kind of normal distribution for where to expect price to bottom. So a normal distribution is the bell curve. So if you would actually look at it, it's pretty much, what are the odds that we get a very shallow wave 2? Well, they're low. What if we get a 50% wave 2? They're pretty high. What if we get a 76.4% wave 2? Well, they're also low, because most of the time we get the waves 2 here. So this is pretty much your bell curve. Of course, it is sideways, but you know what I mean, right? The usual bell curve. It's the same with height for people. If we divide it by sex, male versus female, most people are somewhere in the middle, and then a few people are much taller and a few people are much shorter than the average. That is your bell curve. Okay, so the same here with the probability of where is it going to bottom. It doesn't mean we cannot have a steep wave 2, and it doesn't mean we cannot have a shallow wave 2. Just the chances are that it is a shallow wave 2 are low. It still doesn't mean it won't happen. So that said, normally a wave 2 here should bottom then after a wave 1, somewhere in the 32 plus or minus 50 cent region. Okay, it looks like here a leading diagonal wave 1, 1, 2, 3, 4, 5 in orange counts pretty well. Honestly, even on a closing basis, this day was a lower close, and that day was lower. and wave 3 was not the shortest. So this counts pretty well as, in my humble opinion, a leading diagonal. And normally when you have a leading diagonal, price will go back to the start, which is this wave 2 low. And that would match with about a 76.4% retrace, I believe, for all of this gray wave 1. But it doesn't have to be that way. See that? 23.6 is the opposite of 76.4. So it doesn't have to be that way. If we see price break above today's high, which is about equal to yesterday's high, and close above it, then we are above the 50-day, the 10 and the 20 and the Ichimoku cloud, and we can start looking for a wave 3 into the low 40s. Okay, a wave 4, a wave 5, that would be then 3 of 3, 4 or 5, etc. Okay, then we're going to start preferring this path, which is still preferred. That's why it's on the chart. Okay, and as you can see, we're holding above the warning levels. The warning level for today was yesterday's low. Okay, which is about here, the June low here, which is equal to some of these price levels. IBIT has moved back and forth around. And as you can see, the second warning level is at about 30, almost 32.75-ish, which is where we held the day before on Monday. And as you can see, that was support here as well. And as you can see, it was support here, here, etc. So these are all critical important levels. It doesn't mean we have to go here. Again, today could have been all of wave 2, which would be very awkwardly shallow, but so be it if that's the case. Bullish bias. Bullish bias for as long as we stay above these warning levels. That's the message home. Then we have BITO, I believe it's called, as pro shares. They do pay a nice dividend, just in case you are looking for some cash flow. This is the dividends since February 2023. Why did it start by providing dividends? Because they pretty much rolled their calls forward every month, and they're not allowed to have a profit. So any profit that they have is then paid out to the shareholders, including me, which is pretty nice. I mean, this is a pretty hefty dividend, but as you can see, it can be a lot less as well. So just wanted to point it out that this is one of the few crypto ETFs that has been around longer, because it's trading the futures market, by the way, not the actual cash price, but the futures market. And as such, some of the price movements are less, a little bit more disturbed versus cash, all that stuff. But you can see here, we're still, of course, below the long-term downtrend line in place since March. Same price pattern as IBIT, though this is a little bit more focused in. But of course, the August 5th low was critical there. And also here, it starts to look like 5 waves up, and we're holding above the 200-day moving average. Okay, we recaptured it on Friday, dropped below Monday, Tuesday, Wednesday, back above it. You can see above 18.5 would really start to ignite a further run to at least this uptrend line at about 20 currently. All contingent on holding at least above today's low, which is about 1790, and then definitely above 1725, and for sure above 16. Just want to point this out. So now we have covered Binance Coin, Bitcoin, IBIT, BITO. I hope you didn't find it too boring. I hope you understand how we approach the charts and why we see things bullish versus bearish. And that is based on objective analysis of the charts, not on what I think of Bitcoin, what it's supposed to be for, who owns it, who bought it. I couldn't care less. Price is the aggregate of all market participants' opinion. You can say it's just the aggregate of what they think where price should be. And if that's higher, it's higher, but it has to stay above critical levels for the Elliott wave count as shown to unfold. Elliott wave is price-based, and price is the only thing that pays. So news is not price-based. It's pretty much opinion and a after-the-fact explanation of why price rallied or dropped. So that's not going to work for explaining the price action. Neither is opinion. You can think of Bitcoin what you want, like it is not a tangible currency. Not many people use it. All those things, great, but we're still at 60,000. Okay, we're not at zero. And currently we have zero indication we're going to zero either. Okay, if anything, we're going to go to 100,000. That remains the bigger picture based on logarithmic growth curve, you name it. So we have to remain vigilant still, because there's still some options. And of course, once you make a new all-time high, then completely done with the bearish option. But we can stay closer to home and already say, well, if we start breaking here above 75,120, it is most likely that we have indeed bottomed and we're on our way to that 85,000 plus or minus 5,000 ideal target zone for this wave 5. I still view this rally ultimately since August 5th low as a ending diagonal based on the initial price action, which is extremely overlapping to the upside, extremely overlapping to the downside, again overlapping to the upside. And now we need to see the bulls follow through. They didn't do it last week, and then the bears failed to follow through this week. So now maybe it's finally turned for the bulls. And I know I'm mincing a lot of words, but I really want to hammer it home. There are very few people who analyze the charts this way, and I still prefer it as it helps me really figure out what price wants to do. Historical price action is all great, nice and dandy, but as always, history rhymes but never repeats itself. So what happened in 2019 can kind of happen this time around. We've shown some comparisons, but in a different flavor. So if we would follow that very closely, we would get pretty much kicked off the horse because there will be some variation, which is fine as long as we stay on course, as long as we see price hold above critical levels. So B for boring, but hopefully it's not going to be boring soon. Hopefully we see some breakout soon. I remain bullish, contingent on holding above the warning levels. Take care, trade safe, and I'll catch you all on Friday because there will be no update tomorrow.